there is growing confidence surrounding US, China, and also UK and the EU. On the first, Mr. Trump said he is expecting a deal to be done with China by the middle of next month. And also, despite we had a postponement on the latest Brexit deal, Mr. Johnson managed to get through the European side first. There is fresh sentiment that he's going to get the votes he wants, whether if he manages to get the deal through parliamentary vote either today or tomorrow. So this growing sentiment, confidence, supports the equities, of course. Don't forget we have the US earnings as well. And at the same time, this likely scenario of a US and China trade deal are pushing the dollar down. They are allowing other risk assets like the euro, Aussie, Kiwi, pound to move higher. Now, on the technical perspective, I'm expecting the S&P still in the same sort of. I'm still supporting my outlook. This is wave 1, 2, 3, 4, and 5. This is going to be an Elliott triangle, right? With each cycles between them have a Fibonacci 61.8 relationship. That makes me think that this wave to the downside, okay, is going to move down to around 25.85. Okay, this is where wave 5 is going to end. Now we'll have a bit of a complexity over here with this within this correction. It could be like ABC 1, 2, 3, 4, 5, or it could be that this is a complex pattern, right? We have like W, X, and Y over here. Oops, excuse me, and Y over here, which means that that is going to move down a little bit and then move up higher, and that would be wave B. Okay, moving up here. And then we should be looking for prices to move all the way down. Now, there is a lot of different scenarios, but the medium-term outlook, let's say, is to the downside from a technical perspective. Okay, and of course, that's likely to be seen if it is the case or not this week and also next week, as we have the US earnings. Now, on the other index I wanted to look is the currency cash index, the US index. On this one, we've been looking at this and the diagonal finishing up here. Okay, it looks like it's ended. We broke outside with wave 3, this pattern. And now we, after ending wave 3 around 9 to 21, which is a second Fibonacci extension, duplication of wave 1, let's say, we're probably looking for a correction and then a continuation lower down to 96.58 or 36.99. That really depends on whether wave 3 ended at 97.60 or 97.21, okay? So you can expect that to go down to 96.58 or 96.19. That would be wave 5 minor and probably intermediate one as well. Unless if we get that intermediate one, really want to push below that level and break out, then we should be looking for intermediate 2 and then all the way down. Of course, this is a good confluence level as well, the 96.20, actually anywhere between 96.60 and 96.19, let's say, we could see a correction to the upside, okay? We might have that becoming a false break as well, but they will be not as that scenario doesn't have good chances, because if we get down to that previous level, we're most likely going to break it, okay? Now, on the MACD and RSI, we have seen those signals, right? Now, both are moving along with prices, which means there's going to be a continuation of this breakout move of this diagonal pattern over here. So this is for the beginning of the week. We don't have much of the economic calendar today, so I will pay attention what happens around Brexit, because we are expected to see Mr. BoJo Johnson trying to push through his Brexit plan through a parliamentary vote.